Okay, welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn how to trade the futures markets using the Viper tools, you're absolutely in the right place. First, we got to knock out our standard disclaimer before we can move forward. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody does know that you do trade at your own sole discretion. Alrighty then. Okay, here's what we're going to do. Here's what we are going to do. All right, tonight's topic is, oh yeah, just real quick before we move on, some people asking questions about this whole PG&E electric shutdown in all over Northern California, where a lot of these fires occurred, wiped out a property and killed a bunch of people. Yeah, you got to get some backup power. You got to get a generator. They're all sold out. Everything, all the supplies like battery power, flashlights, all kind of stuff you need for a situation like this. All the hardware stores are just cleaned out of all that stuff. Yeah. So anyway, I dodged a bullet. We're okay. We're good to go. Let's get over some charts. And I want to start showing you some stuff here. Okay. And I'm going to do it like this. Screen 1 has gold and ES on it. So tonight's topic is called correlations. So I'm going to go through a number of different correlations between various markets and how that works, how you can trade it, how you can use correlations to your favor. Now, a word of caution before we do this, just a word of caution, this doesn't always work. Okay, nothing, and most of you know, in this life, in the world, is 100%. I mean, there's things that have a high likelihood of happening, like 70, 80, 90% of the time this will occur. But there are times when it doesn't. So you have to just go with whatever the actual price action and volatility is doing. So if it's something, we have a saying, if the market's not behaving itself, then the correlations are no longer valid. By the way, if you're just coming in, don't worry. We're just getting started. You haven't missed anything yet. And this is recorded. If you have to leave early, everybody will get a copy of the recording tomorrow. We'll post it online, and everybody will get it. So if you come in late, got to leave, whatever, it's all good. We got you covered. Now let me explain what you're looking at. Some of you might be looking at this for the first time, or you might be visiting us on a free trial or our little open house thing that we did this week. So so I'm speaking to you. Welcome, welcome. People still coming in here, no problem. We're just starting. So let me just blow one of these. So we trade the futures markets on an intraday basis. So we don't hold overnight positions. This is not like a buy and hold strategy where you get, Apple stock and you put it in your 401k for 10 years. That's not what this is all about. We're looking at taking advantage of short-term bursts of volatility in futures markets. And so namely, what we trade is the E-mini S&P, which is the chart on the right. That's ES. So each of these are a little bit different. All the equities, which is the E-mini S&P, NASDAQ mini futures, Russell mini futures, and the YM, which is the mini Dow, are all in the December contract. Here we are in October. Okay, we'll roll that at the end of the year. And each one of these have different amounts of values per tick of movement. So the YM and the Russell and the NASDAQ, each tick of movement is worth $5. Okay. We also trade gold, which is this chart right here you see. That's $10 per tick. So each tick of movement is worth $10. There's 10 ticks per point. So each point is $100. Okay. Same with crude oil. Most of you know, of course, my business partner Gary heavily trades crude oil. It's on the November contract. It is also $10 per tick of movement, and 10 ticks per point, or $100 per point. Okay, and then of course we have the ES over here. Each point is $50, and there's 4 ticks per point. So you can do the math, $12.50 per tick. Okay, now this is pretty straightforward. We're connected to a data feed, and these are 4 range bars. So each bar has 4 ticks in it, right? And when you are in a downtrending market, generally speaking, you will have a solid red background. Oh, and of course you can see that these are our indicators. So we, Viper Trading Systems, have generated these indicators that run against the data that's coming in. And so they are as follows. The background colors, green, red, and transitional. Okay, we have the power meters. That's the various trends on the charts. When you're in a downtrend, these power meters will all be red. When you're in a solid uptrend, they'll all be green. Other characteristics of a downtrend are red bars. This little sneaky snake line is called the stealth. That will be present. And you'll get lower highs and lower lows, and so you'll notice that the market will stair step down like such. Conversely, in an uptrend, the background will be green. Bars will predominantly be blue, and the midband and all the bands will stair step up. We have predictors, which are the swings, and of course we have alerts. I'm going to leave those off just for now because it's really important to learn how to trade, and then these alerts help you see what you're already seeing, and I'll turn those on a little bit. Okay, and the most prominent thing on here, of course, is the bands. We have the thick middle line in the middle of the bands called the midband, and we have 4 bands below it, 4 bands above it for a total of 8. This thin red line is called line 2 on the top of what's called band number 2 right here. And then, of course, this thin green line is called line 6 on the top of band 6. So from the bottom 1, 2, 3, 4, mid-band 5, 6, 7, 8. Okay? All right. So now what we do is we are what you call retracement traders. So we have this notion of what's called thrust and retracement. And you're going to notice that a lot of our trades are going to be centered around 3 areas. The midband itself, at or on it, and a midband trade both up and down is considered up, meaning uptrend for longs, and downtrends for shorts are located on the midband or in the bands immediately above and below it. For now, I'm going to pretty much kind of stick with that. There are other trades that we take. I'll just briefly explain what they are. And the focus of today is going to be more on sort of getting your handle around the big picture of what markets are doing from a trend perspective, and then trying to zero in on where you want to actually take the trades. It's kind of like, what's a good way to think of it? It's kind of like, sort of starting at maybe like the 10,000 foot level, sort of getting the big picture overview of what markets you're going to trade are doing. And then you sort of swoop down a little bit, maybe you go to 5,000, 1,000. Next thing you know, you're close to the ground. You're really starting to see what trades you're going to take. That's how we're going to do that, right? Okay, so from a short perspective, you have 2 other possibilities. You have what's called minimum criteria trades that come above. You might hear those in the room called out. On the short perspective, that's where you come above line 2 in stealth, up into this area here. And then deep retracements or phantoms can go as far as the other band 6 in a downtrend, and the bars can actually turn blue. But be clear, just to be clear, this is not a trend change. This is not a trend change, okay? Not a trend change. Just we all are on the same page. Now, the first thing I do want to show, so it's a very similar situation over here. If you start to head up, and I'll show that when this starts to unfold, I'll show more of the uptrend on ES. So one of the things that I'm going to just put this right on the chart. And so the correlations that we look for, and I'm very fortunate that I have 4 very large screens, and so I can take, generally speaking, the ES chart is right in front of me, okay? That's kind of my go-to instrument. Most of you know that. To my immediate left, I have the gold charts. In the screen to my upper left, screen 3, is the crude oil charts. And then I normally trade Russell and NASDAQ on the 4th screen immediately above the screen I'm looking at here. So I have a Russell here, and I'll have a NASDAQ chart here, and I'll decide which of those that I want to do at the time, whether Russell's behaving herself, and sometimes they don't. And I'll show that too. So we have markets called, in a summary point of view, we have what's called the equities, and that would be ES, RTY. In fact, I'm going to do it like this. I'm going to put ES and NASDAQ together like that, okay? And the reason I'm doing that is when I show those two markets today, you're going to see they're pretty highly correlated. In other words, the algorithms, we all know, of course, that the big banks and the big, trading houses who trade futures run scripts. In fact, I think it's somewhere north of 75, 80% of the trading is actually computer-driven scripts, right? You all know that, right? That shouldn't be a surprise. And so what happens is these equities, generally speaking, the scripts will all be in sync with each other. So the movement you see on NASDAQ looks very much like you see on ES, and I'll show that, okay? Now, there are some divergences. There are times, and if you've watched charts, you know that sometimes the RTY, the Russell futures, marches to its own drummer. So that would be uncorrelated. There are times when it's uncorrelated. In other words, the script running against Russell will diverge from those running on ES and NASDAQ, okay? And I've seen also divergence in the YM, the mini Dow. So let's do an example here with these. Let's say, hypothetically, that these markets are in an uptrend, as they were early this morning at the open of the equity markets, okay? Now we have commodities like gold. Gold is considered a commodity, and that would be GC. And so generally speaking, if the equities are moving up, then what should gold be doing? Anybody? Remember we said that gold tends to be a mirror image of the equity. So if equities are heading up, what would we expect gold to do? What direction should, if the correlations are proper and intact as they should be, right, gold should be heading down, should be in a downtrend. Okay, I was saying everything's good and right with the world, that's just kind of a saying we have, then this corollary should be true. Okay? And we trade it that way. We trade it that way in the room. We call the trades that way in the room. And I personally take trades in this manner. Unless the correlation, if you recall the other day, I think it was Tuesday morning, where, and this is very strange, as I recall, the equities were heading up and gold was heading up. That's very strange. It doesn't happen very often. But when it does, you don't, just so we're all on the same page here, you don't ignore what the trend is. You don't say, well, the equities are heading up, gold should be heading down. I'm going to go ahead and short this. And it was clearly in an uptrend. You're going to get creamed. So this does not override what the price is doing. The price is king. Okay? All right. So let me illustrate this by starting to move these charts forward. And as you start to see the trends unfold, this will become apparent to you. Now, let me orient everybody here. So, we're all on the same page. Gary opens the live room at 5:55, so that's right just before 6 a.m. Pacific, and that would have been right about in there. Okay? Now, the reason he does that is that he heavily trades crude oil. I'm going to leave crude off of here because sometimes in the old days, and going back a couple of, 3, 4, 5 years, crude oil and the equities markets algorithms were tightly correlated. So if crude was heading up, then usually the equities were heading up and gold was heading down. But I'm leaving CL crude oil intentionally off of here because that has not been true lately. Sometimes they're correlated, sometimes they aren't. Okay, so I'm just going to leave that off for now. So the corresponding line for 555 on the ES chart would be located somewhere right about here. So I'm in California. This is all Pacific time. 5:45 when I'm right somewhere, I guess, kind of right about in there. Now you can notice that in both this area here and this area here, you are getting what is called consolidation. In other words, they're just kind of going sideways for now. Right in here on gold to the left, right? And over here on the ES chart, more or less in this area right here. Just chomping around the mid-bands, trying to decide what direction it wants to go. Now I'm going to slowly advance both charts, okay? And let me get this off of here and blow this up a little bit more like that. Scrunch this down a little bit here so we're all kind of in the same page. Okay, this is 613 to the right. Now I'm going to start advancing this chart. Now, when you don't have to say what direction it is on either chart. In fact, I'm going to turn this a little confusing. Get that right off of there. Okay. I can't do it like this. I'll engulf these areas like this. And just to be fair, I'll engulf this area like this. Now, when you start to see what you think is these markets are starting to break in one direction or another, and you don't have to call it, but when you think you see it, you simply type in the letter T, signifying that you're believing that these markets are now beginning to trend. Like I said, you don't have to say uptrend or downtrend, just a simple T. Okay, I'm going to start by moving gold. I'm going to advance it about, here at 622. Let's go all the way out to maybe 630. Okay, all right, so there's gold. Right, there's gold. Let's do the same thing on ES over here to the right. Okay, we're going to advance it. Okay, there's 621, 625, 630, and there's 633. Okay, here's 631. Let's keep going. 632. Let's keep going on. Remember, you're looking for a trend. You're looking for these markets to start to show some direction, right? Either up or down. Okay, there's 636 on ES. What do you think over here? What's starting to happen on ES? What's going on? Came out of the box. What's it doing? What's it doing over here? Okay, let's take a look at gold. You're roughly within 6 minutes of the same time. What direction is gold going here? What's going on with gold? And what's going on with ES? Okay, want some more bars? Okay, let me keep it going. Okay, what kind of trend is developing on gold here? What direction is that going? How about this? Let's keep going with the ES. Okay, ES is all the way at 647. Let's move gold to 647. Okay, right now we're not calling any trades or anything right now. That's not the purpose of this exercise. This purpose of the exercise is to see what the correlation in and what direction the markets are going. Yeah, okay, good. All right, so everybody's responding here. We're seeing that gold's going down. Gold's in a downtrend, right? And ES is heading up. So the correlations are intact, right? So now we're looking for long trades on, if you're not long out of here already or short out of here already, you need to find some retracements where markets are going to pull back for you to get in. And in the case of gold, we're looking for what? In a downtrend. What kind of trades do we take in a downtrend? Shorts, right? We're looking to short on a retracement, a pullback, right? And on ES, what kind of trades are we taking? We're looking for a pullback to get long. So we're looking to take longs on ES. We're going to buy support, right? And we're going to short resistance on gold. All right, good. We're all on the same page, right? Here we are at 630, between 636 and 647. Now I'm going to advance each one slowly. And I'm going to do gold first. And when you think you see a short trade set up on the chart, as I advance it, you type in the letter S. Okay? All right, we're reconstructing real time from this morning on gold. Here we go. Okay, here at 638, 640, 642. There's 646. Okay, I'm going to leave it there for just a second. And let me go ahead, we're at 646. Let me go a little bit further on ES. Looking for long trades. EF just took off like a little bird there, didn't she? 655 for long trades. Okay, there's 707. Well, this is what it is right now. So let me just explain. There's been some questions coming in. Um, uh, the red power meters are where it's at right now. So we would have to go back and run market replay for you to see how the power meters actually looked. I would bet money that they were all green. Okay, they were all green. Now let me stop. Let me come back over to gold. Now we talked about retracement trades, right? Remember we had this notion of thrust and retracement. So in the case of the downtrend, we can clearly see that the thrust continued down to here. Somewhere around 645, excuse me, between, excuse me, hold on. Between 644 and 646, we had this pullback right here. Now, let me ask a question. Are these bars, do they qualify as a mid-band trade by our definition for a short, yes or no? These bars right here. Do they count as a mid-band trade, yes or no? Even though they don't touch the mid-band, do they qualify by our definition of what constitutes a mid-band trade? Let me help you out. Let me draw something like that to try to help you. Yes, this is a mid-band short right here. We called this out. If you were in the live room, we called this out, and I took this. I took that trade right there. I took it. Now, where was ES here? The spot to get on ES was this pullback right here. We're not breakout traders. I want to be clear. So what's the difference between a breakout and a retracement? Let's talk about that for a second. Some of you may know that, some may not, and that's okay. When you have a large area like such, or even larger, even if you engulfed this area here, when the market breaks out of it, it's considered a breakout trade. So this would be an example of a breakout trade. We used to trade that style many, many, many years ago. I'm talking about 8, 10 years ago. That was one. In fact, some of our early scripts, if you recall, we have people that were with us for 10 years. We used to call them breakout scripts, remember? Okay, what we noticed, though, was that when you take a breakout trade like that, many, almost all the time, you get retracements, and retracements come like this. The problem is when you take a breakout trade, you're filled long. A lot of times you're filled long at the apex of a push. And if you have like an 8 or 10, 12 tick stop, we were continually getting stopped out. So that was not a good way to trade. So what we learned was, over time, of course, is that you have to wait for the pullbacks in a trend. And when you get a pullback in a trend, how about that? How those bars right there? Is that a long mid-band trade? Yes or no? Right there. Those bars right there. Is that a long mid-band trade on ES? Yes or no? What say you, team? I'm going to help you out again, too, because some of you are just learning this stuff, right? It's okay. You're just learning it. What's that right there? What's that little rectangle mean? What does that mean? Yeah, it means that if you're in the band above the mid-band, on the mid-band itself, or the band below it, it is considered a mid-band trade. In this case, long in the uptrend. So yes, that's the long trade right there at 630. The open of the equity markets, that's a long trade on ES right there. Okay, so as of this pullback here, or if you had it boxed in here, or you got an ABC pattern. I teach this all the time. So does Gary. ABC is when you get this kind of price action. You had a little sort of a deep, and push out of which is very similar to what happened here, only it was in the down direction, right? So this broke up and pulled back, gave you a shot to get in. This pulled down and pulled back to where? Similar price action, only in the reverse direction, right back to the mid-band and rolls over. Is that a legitimate mid-band short trade on gold? Yes, absolutely. So here we're shorting gold and we're getting long ES. Now, was there a little ABCDE kind of thing here? Yeah. Did it come back up into this area here and give you another shot? Yes, right there. Lots of spots to get short on gold, right? So you had the breakdown here, which technically could be defined as a breakout. We don't like those. But you had a legitimate pullback here and here and here. 3 chances to get short after the break. Unfortunately here with ES, you didn't have many chances to take this other than this spot right here, because this wasn't deep enough pullback. However, this barely met the definition of minimum criteria here. Now these bars, let me blow this up and explain. These bars here came below stealth, the green sneaky snake line. We've had that as an indicator forever. That's called the stealth line. It's useful for trail stops. So it helps, it's sort of a visual thing. See how it kind of ratchets up along with line 6 as it follows the price action up. And when you close below that and line 6, this is called a minimum criteria long trade in an uptrend. And that turned out to go ahead and correspond with the final thrust up here like this. Now, over here, you had a chance to get in long right here. Is that a legitimate long trade on the mid-band? Is that a mid-band trade? Yes, it's sitting right on it. Did we see that? Yes. So yes, that is a long trade right there. Now, was this a long trade right here, and did it stop out? How about this one right here? What happened to this if you had boxed it in right here? Now, it really depends on where you got filled and how deep your stop was. Let's look at some numbers real quick. Let's say hypothetically you got filled on this bar right here at 35 1/4, and it went all the way to 32. So that's 3, 4, 15. In cases like this where it comes up, bips up, doesn't even give you a scalp and comes back, these are trades that you dump. So you might have taken a scratch or a loss on this one right here. You would have got out on this bar right here. And then you would have had to re-engulf the bars and get long again from there. And then it took off again. And the same thing happened with gold over here like this. So here you rolled over, you came down, you started to drop. Here's 7 o'clock. Oops. Yeah, you stopped out. And then you had to re-enter. And then over here, just finishing this ES setup here, does this meet the definition of the minimum criteria along these bars right in here? Is that legitimate long trade on ES? And it doesn't meet the definition of minimum criteria. Now, some of you might be glazing over because we're going over a lot of trades right here and different types of setups. Yes. Yes, it does. Yeah. So you had a box here that stopped out. You had a long that gave you a scalp back to the top of the range, and we were calling this all out in the live room, and I was taking these. Remember, I stopped out over here, and then I got back in. Remember? Anybody remember pulling back into the 32, 33 area and getting long? Remember? And you had another shot right there. Now let's go look at gold. Now, when you see another short on gold, I'm going to go ahead and start advancing from this trade. And when you see another short trade entry, just type in the letter S. Okay? Here we go. Okay, here it's 650, 650, 651, 651, 652, 653, 655, 658, 654, 655. Blow it up a little bit here so you can see bigger candles. 656, 657, 658. Let's do that again. 655, 54, 56, 57, 58. Let me see here. I mean, just for the heck of it, just for giggles, let's put something right here. What is that? Where are those bars located? I wonder what that is. What could that be? Let's do it again here. 654, 55, 56, 57, 58. Where are those bars located? What is that right there? That box. Gene says it's money. You bet it's money. It's absolute money. That's money right there. That's a retrace. That's a textbook midband trade. I mean, I don't think. Other than the bars sitting over here, right on the midband. I mean, it doesn't get any more clear that that's a midband trade. These are just right wicking it. Every single person in this room tonight, and everybody listening to this recorded, should have typed in the letter S when this thing formed right here. So let me back up for a second. In all fairness, I know some of you are completely new and you might be looking at this for the first time. And so if you're just learning it, don't worry about it. It takes a while to pick up on how to do this. Don't panic. We got hundreds of hours of recorded material. You can take as long as you want to learn this, really, seriously. So just to recap, what you're looking at here is that when you are in a downtrend, you are looking to take shorts off of retracements. And normally those are going to be located, you're going to be shorting the market at or near the midband. Now, let's look at how much these trades were worth. Let's say hypothetically you got filled on this trade right here, on this bar right here. Let's call it 02, so I don't have to get my calculator out. Let's call it just a round number, 02. Within a tick or two of 02, you're short. And you trail the stop, and you get out down here at, I don't know, maybe you got trailed, stopped out at 99 something, 99.50, 99.30. What's 99.30 to 02? Well, 7 takes you to 1,500 even, 7 ticks. 27 ticks. So this trade right here was worth how many dollars for one contract from here to here? 27 ticks. I told you earlier what it was worth per tick, right? One contract would be $270 less commission, right? How many of you just would want to make $200-300 in a whole morning? That's all you want to do. $200-300 in a whole morning. That's all you want. Yeah, commission's like $3-4 depending on your broker. Yeah, so and you could have made a little bit more, a little bit less. I'm just using that as an example. I mean, you could have gotten in a little higher. You could have get out a little quicker. So within a stone's throw of $300. Sign me up. I'm done. Good. Yeah, so I'm trying to impress upon everybody here is that we're going to show tons of trades, trade. Some are going to make $100, some are going to make $500, some might make $1,000, right? Let's come over here on ES. Let's suppose that you missed all these trades over here, all of it. You just missed all of it. You didn't get any of it. Let's just look at a couple entries. Let's look at this one here. Here you got long at, I don't know, let's say you got filled on that bar right there. That's 31. And you got out up here at 36. So 31.25 to 36.25. That's 5. 5 points. 5 points times, what's it worth a point again? Anybody remember? What's ES worth? What's it worth a point? Remember, I said at the very beginning, I'm checking to see if anybody's paying attention here, right? What is that trade worth on one contract from here to here? 5 points times how much per point? 50, 250. One contract. 2 contracts, 500, 5 bones. So if you put 2 contracts short gold here, and you took that trade, and you took 2 contracts long ES here, and you took that trade, how much money did you make? Well, let's add it up. How much did we say the gold trade was worth? That would be a 2 lot, which is 2 contracts, right? 2 lot times, what do we say, 27 ticks? So that was 270, is $540 on the gold for the short, right? Didn't we say that? GC short. And we put 2 contracts on, lot, long, and how much do we say that the ES trade was worth? 5 points, right? Times 50 was 250, which equals how much? 5 bones for the ES long trade. And you add those 2 together. And how much does that give you? How much if you took 2 contracts on each of those trades? I'm going to put a total here, and what should that number be? Oops. This thing is not cooperating with me. Equals how much? 1,040 less commission. So you'd have commission on 4 contracts, round trips. So 4 times 5 is 20 bucks less, commission. How many of you would be done trading if you made that? Say, call it 1,000 net, 10 bones. You made 10 bones. Bones $100. Bones a C-note. Less commission. Call it 10. And you would, depending on your fill, you might have made a little more. You might have made a little less. This is just an estimation. Done for sure. More than done. Well, yeah, I mean, depending on your tax filing status and whether you traded with Top Step or you traded with One Up Trader or your own account, that's going to be a function of your tax situation. I'm just saying, I just showed you how to make $1,000. I just showed you how to do it. Now, in the gold trade, you got in at just before 650. Let's call it 649 short here, and you were in that trade to 654. This trade lasted 5 minutes. On 2 contracts, you made $500 in 5 minutes. Now, over here, you got in this trade at 652, so it was only about 2-3 minutes after the short on here, and you stayed from long from 652 and change to 7 o'clock. Well, this is actually closer to 6:53. To 7 a.m. is 7 minutes. You were in this trade for 7 minutes, and this trade for 5, and they overlap by about 4 minutes. I'd say that's a pretty darn good morning myself, particularly given the fact that we didn't include any of this. Okay, we're saying you didn't get this trade at all, and that would have been probably double, more than double this trade over here. This one went from 18 all the way up to 29. That's 10. That's 11. That's $550 on a 1 lot. This trade right here is $550 on a 1 lot. Let's go back over here. Let's say that you got the gold. You didn't get in until this 3rd box, filled short on that bar right there at 07. Let's call it, just for round numbers. And you stopped out all the way down here at 02. How much is that? 07 to 02. Points. This trade right here. From here, on the close of that bar, short, using Object Trader, right here. That one, right there. To here. Maybe it was, I don't know. Let's just call it 02. I mean, it looks like it was on 150, but let's just say 02. You didn't get out till up here. I don't know, close of that bar right there, for whatever reason. Let's keep it round numbers. 500 per contract. Yes. So let's do the math. Let's suppose that you didn't take these ones over here. This one that we just showed. Let's say you didn't take that one. You took this one. This one you got here, you made 5 bones on the short on a 1 lot, and here you made 550. So how much is those two worth? The long here that you got in at 632 and you got out at 650, so that you were in at 18 minutes, you made 550. And here you got short at 631 because you were long ES and you were short gold right here, and you rode that until 644. You were in that 13 minutes and you made another $1,000 on a 1 lot. 1050 actually, less commission. I mean, there's money. I just showed you how to make another $1,000 just like that. Just like that right there. That right there. I'm not making that up. I took these. Now, you want to hear something cool? I did these with 4 lots on. So you can do the math. I did these with 4. I don't do them with 1 or 2. I do them with 4. So you can see when you're on the right side of these trades, the money racks up pretty quickly, right? I mean, you know, anyway, okay, let's just continue on. Let's look at a couple others, and then I want to show the correlations between the equity markets, okay? All right, let's continue on. Now, I'm going to do just 2 more. I want to do some longs, shorts on gold, and then another, at least 1 more long on ES, so that we all see it. And then I'm going to do the equity correlations before I run out of time. Okay? Let me do the another long on ES if we can. I'm trying to, just give me 1 second, please. I'm trying to figure out where I left off on this one. Okay, let's do this. I think I already showed this one. I might be out of gas on this one. Okay, I'm going to show 2 more, and then I want to do another correlation. Okay, I'm showing you right now the tail end of these moves, which was right here. 713, and then I want to continue gold out, and then gold got choppy after about 720, and then equities continued up. So you had 1 more deep retracement on gold right here. I think the room was still open and we called this. I know Gary did. I don't think I took this. I think I was done by about 7:15, 7:10. I stopped out of gold in here, as I recall, and then I did not take this deep retracement, but Gary did call that. And that was a pretty good trade. As it turned out, let me see how many ticks you got on that one. You filled it not 50, and you get out at 750, 330, 35 ticks, so 350 on another short here on a 1 lot, like that. And then the long here, I'm just going to count from this. Bar right here, long on ES, from this bar to here. So what was the final long on ES worth? Let's see, you got in about 36 and a quarter-ish, and you got out up here at, I don't know, 46. 10 times 50 is another 5 bones. I'm going to show that in a second, Kevin. All right, is everybody seeing the correlations and where to get in, what the trends were? Trend was down on gold, you were shorting rollovers. Everybody sees that. Trend was up on ES, opposite direction as it should have been, and we were buying and getting long. And what I'm trying to press upon you is that, and I'm just going to write it right on here, okay? I'm just going to write it right on here. And here's what it is. Okay, here's the secret. This is going to tell you a little secret, okay? And here's what it is. What you want to do every morning is you want to achieve your trading goal for the day. And then what do? Once you hit your goal, let's say it's $500 and you hit it on one of these gold trades, or you hit it on one of these ES trades, or maybe your goal is 750, or maybe it's 1,000, or maybe it's 250. What do you do after you hit your trading goal for the morning? what do you do? Okay, so well, I need to type something in here that you're going to do. Do you keep trading? Should I put in keep trading? Is that next? What should I right underneath here? What words should I type here? Anybody help me? Starts with an S. Good. You stop trading. Now, if you're close to your goal, let's say your goal is 1,000 and you're up 650 and you want to take one more and you see an excellent setup and a trend, should you take it? Of course. Right. Most traders, many traders over the years, and all these years I've known and talked to and helped train, probably thousands. I lost track many years ago. It's probably thousands. The ones that get this, that you basically are in there to hit your goal and stop, stick around for a long time. They're the ones that get funded with Top Step. They're the ones that get funded with One Up Trader, right? They're the ones that are drawing money out of those accounts every day, or have funded accounts that they're drawing money out of every week, because they have discipline. They're trying to make a couple of $500, $1,000. They nail it with one or two trades on a one or two lot. And I've shown you how to do that over and over right here, how to do that. And then they stop. And then they go the next day, and then they do it again. And their win rates are huge. The win rates are like, 90+%. And if they do seldomly have a winner, or a loser, the loser is so small and tight, it just doesn't even matter almost. So what we're showing, and I'm trying to impress upon you, is we might be in that live trading room for an hour and a half or 2 hours, and we might show 10 or 20 trades. But the point I'm trying to make is, do you have to take every one of them? Do you have to take every trade that I've shown on this chart? Every trade that I've shown here, do you have to take all of them? No. That's what I'm trying to show you. You don't have to take all of them. You can take one or two of them. That's all you need. One or two of these would have got your goal. That's what I'm trying to show you right here. Right? It's pretty much every morning. It's just like that. Every morning is just like that. You just got to pick your spots. Good. Okay, now let me convert this gold chart over to a NASDAQ chart. Let's see, Kevin has a question. By the way, if you have any questions and I missed it, don't hesitate to type in another question. Because we got a lot of people in here tonight. Welcome everybody. Some people coming and going still. As I mentioned earlier, this is recorded. We will post it tomorrow. Everybody get a copy. I've seen people take off early too. And if you got dinner and commitments, we understand. No problem. It's late. Back east, it's like almost 9 o'clock. While I'm answering questions, let me convert the left chart to NASDAQ. Stand by, please. Stand by. Let me circle back and get Kevin's question. Do you find that in the morning you find the best consistent types of trades? Yes. Yes. So now I know Gary gets up early, and I think his wife gets up early occasionally. She has her own funded account now, right? And they look at, I believe in the pre-market they look mainly at crude, but occasionally they might take a gold trade if they got a killer setup, right? I rarely trade pre-market. I haven't traded pre-market in years and years and years. I find that between 6:30 and 8 o'clock, that there's more than enough volatility in these markets to make good money. Sometimes the spreads are a little larger in the pre-market session. The liquidity is, you might get some more slippage, especially on the less traded ones like EMD. It costs a few ticks to get in and out. But you've seen some days where Gary's wife will get up and trade with him in the pre-market session, nail a crude oil trade or two, and she'll be done before we even open the room. So once you know the methodology, I should tell you while this is loading. By the way, I'm all locked up. Let me show you, just so you understand what you're looking at there. See the spinning top? I tried to put I hope this doesn't blow me out. I'm trying to get NASDAQ to load right here where gold was, and it's not going too well. I hope it doesn't blow up. NASDAQ has a lot of bars. Okay, it's probably loaned like 2,000 bars or something. It's going to take a minute or two here. But yeah, but she has pretty good discipline. I mean, most times when he shows her account, she might make, 250. I think today was like 410, 350. That's all she wants. She'll take one trade, get 30 ticks on crude. Might be in the trade, 15 minutes, 10 minutes, whatever. And then you're done. If that's your goal, then you're done. Go off, have coffee, have breakfast, go see your family, go to work, have a part-time job, retire, whatever you want to do. That's the beauty of trading. You can do as much or as little as you want. The good thing about sticking around if you're in the room. Oh, this is what I was going to say. We have, I think I've mentioned traders all over the world. A lot of them have been with us 9-10 years since we started. And a lot of them, of course, they license the software from us, just like everybody does. And they may come in the room, they may not. They may trade. I wanted also, if I have time, if you ever look at, let me show you two other charts to look at. 6E, which is the euro dollar futures, 6E, and the dollar index, DX, are another very highlighted cross pair. Or that's 4X. Pair, another pair. So what you're going to find is that when 6E is going up, let me do a pop quiz for those of you that know currency futures. We have a lot of traders over in Europe, in Asia and different parts of the world that they're trading like the Asian session or the European session. So if you're trading 6E long, what direction are you trading dollar index DX? See if you know this. Okay, so you're long 6E. What direction would you be on DX? Would you also be long? Or what? What are you? If you're long 6E, if you traded those markets, in fact, some of you might remember we used to have those two in the room. You can trade those. Sometimes overnight you get great movement. Setups are the same, mid-band trades and a trend, right? Good. Most of you got that. DX is a mirror image, just like gold and ES, of each other, right? So if you're long 6E, generally speaking, go look at it. If you have your Ninja fired up right now, and you can do it, pull on your instrument thing, pull up 6E, and put a DX dollar chart right next to it. It's amazing. Now, the reason I like those correlations when they're really working well, by the way, I'm still locked up. I'm trying to fill some void here while I'm waiting for this NASDAQ chart, which is being a little stinker. Darn it. Gets my goat when that happens. Yeah, those, of course, you know that 6E, the euro, so the markets that move overnight in the Asian session. So we just started the Asian session at 5 o'clock Pacific. So we're an hour into it. And that would be the 6J, Japanese yen futures. Sometimes the Swissy moves, 6S, Canadian occasionally, 6C. Now, the ones that move after midnight when you go into the European session would be 6B, British pound futures, right? Those used to correlate mirror image with the dollar, but not so much anymore. Not so much anymore. And then, of course, the euro, 6E futures in the European session, which starts at midnight my time. Midnight my time is when the European session kicks off. By the way, I want to show you one other thing while this chart is loading, which is really super important if you're going to trade those currency futures. Let me show you this real quick, so you don't want to get if you're a night owl and you're playing around and you don't get your head handed to you. You want to go to this site right here, Forex Factory. Stand by, I'll show it to you, and I'll show you why that's important. Well, my locked up spazzy chart's getting all spazzed out. Can everybody see the Forex Factory website right here? Forex Factory web page right in front of you. While our little Nazi's still spinning over here. Spazziness, wazziness. The crazy spazzy. All right, now there's a filter over here. And so let me show you how you do this real quick if you're going to trade currency futures. Over here, you have to pick the currencies, the news, critical news that you want to track against the instrument that you're trading. So 6A would be the Aussie, 6C would be the Canadian, Swissy is 6S, Euro is 6E, and British Pound is 6B, and of course the US dollar, right? And the Yen is 6J. Yeah. So what you do is you apply the filter, and then at 1:30 a.m., which is an hour and a half into the European trading session, if you were trading 6B, which is the British Pound futures, you would want to know that they have their GDP numbers coming out tonight. Now, what that means is that you could get a shotgun on 6B when that news came out, and you don't want to be in the, that would be like having a long position in the middle of a crude oil inventory. There we go. So just remember that, okay? If you're going to trade these currencies overnight or in the morning, you want to know, there's going to, here's another 220, you get their equivalent of POW talking. Okay, that could affect the euro here at 4:30, so you're 4 hours into the European session. So just put all that up so you're tracking it, okay? All right, you get clobbered, you're short and all of a sudden some great news comes out on the GDP front and it just wipes you out. You don't want to do that. Yeah, make sure you're on top of that. All right, let's go back and look at SPASI. Give me 1 second, please. I'm loading up the SPASI data. The reason we call it that is because we used to have it in the room. Some of you remember that we had it in the room, right? And, sometimes the retracements are so big and fast and deep. Those algos running on NASDAQ are just incredible. It just you whip you around for, 10 minutes and then run 150 ticks. So you better take your blood pressure medicine if you're going to trade NASDAQ. See if I can get the correlations lined up here together on Spasinus Wasinus. Sometimes she's correlated to ES, sometimes she isn't. So you got to have some patience with SPASI. Let me condense these two down and see if I can put them right next to each other. Let's try to start at 6:30. Try to get myself out. Give me 1 second, please. Going to get rid of this thing right here. I'm going to get rid of this thing right here. And I'm going to bring it up like this. All right, just stick with me here. Here we go. Okay. Almost out of time. Oh, I am out of time. Here we go. Here we go. Here we go. 624 on NASDAQ is right here. $624 on ES. Now I'm going to clean the ES chart. I'm just going to clean it up so you get a real good. The purpose of this exercise is to just get an understanding of how the two markets correlate. We're not going to look at trades anymore. We're done with that. Can you see the difference between the two? The huge difference between these two charts? Here's 624 on the right. Look at everything that happens to the right of this line on ES and how the trade's set up all the way until 8:11. Well, let's do this. Let's do this. Let's do it this way. Here's 651 on ES right here. 650 is right here. 651. 651 on NASDAQ is way over here. This on ES price action to the right, in fact, I'm going to scrunch this down so you can get a good understanding of it. This right here is equivalent on NASDAQ to all of this right here. Here's 651 on NASDAQ right here. This on NQ is equal to this on ES. This. Now, just looking at them right next to each other, which would you rather trade? See, I was telling you about, I mean, clearly you can see that NASDAQ was heading up. It was getting higher highs and higher lows. But look at the huge spike retracements you had to deal with, where it came way past the mid-band down into here. And then you get this huge spike up. And you get this huge deep retracement very precipitously. Very quickly this happens. I mean, it's like bam, right in your face. And then all this chopping around here at 642. And here's this, just, you know, just to emphasize what I'm talking about here. This little patch of consolidation on ES right here is equal to this on NASDAQ. This is equal to that. Yeah, you think less chop? You think? That's huge. That's huge. Now, of course, this is what I was trying to tell you, though. See, now you dealt with all this spastic price action here, all this slapping back in your face. And then, after jerking you around, she runs all the way up like this. This is what NASDAQ does. She'll break, and then she'll get a huge monster run all the way up like that. Right? 4 ticks per point, 77.10 to 45 is 35. That's a 100-tick run right there. It's 100 ticks. Whereas over here, you know, you're probably looking at like 20, 25, 30 ticks. 30 to 40 ticks is a huge move on ES. That's a big move. But, you know, you had to put up with some pain. You know, how did you do on this? Did you get whipped around? Did this turn into a loss? Were you upside down? So that's the thing with NASDAQ. You know, either you got to buy and hold it and put up with those huge pullbacks, or you got to be prepared to take some losses, and then you better hope that you catch a 120-tick run on maybe a 2-lot to make it back. That's why I keep NASDAQ tucked in the corner. You know, I may or may not trade it. If something sets up, and I know that like gold is tanking, as it was this morning, and I see good trades setting up on ES, and I'm long, and maybe I'm long the Russell, sure, I'll go ahead and put a 1 or a 2-lot on NASDAQ, and I'll ride it too. But, you know, you got to understand that you might feel a little bit of pain on NASDAQ before you catch that run. And that's why we took it out of the room. Okay? Next time we come in, I'll do something similar to this. I'll bring in maybe the currency futures a little bit. We can look at those. I'll show the Russell. We'll see how the Russell does against gold and the other equities. And we'll also look at more details on trade setups. I'm going to go ahead and stop. I've run out of time.